Good afternoon, everyone, and welcome to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, it's a lackluster day for investors. We have not had much to enjoy or rejoice about. It looks like we are going to end a very crucial week on a whimper. If you look at the Nifty and Sensex, they have given up most of the initial gains that they had seen at the beginning of the session, and they're trading somewhere around the flat line at this point of time. So possibly we could have another positive close on the market, but at this point of time it seems like there is a little bit of supply pressure coming into the market around that 18,100 mark. If you look at the small cap space, that is the one space that is actually outperforming both the mid cap and the large cap stocks right now. Also, the Nifty put call ratio has also inched above 1.1 at this point of time, basically indicating that the level of bearishness amongst traders is rising a little bit. A lot more people out there are trying to hedge themselves against possible correction in the market going ahead. So clearly the PCR is indicating a little bit of bearishness, but at the same time, if you were to look at the technical setup for the Nifty and how the index could possibly trade next week, things are still looking quite bright. They are still quite optimistic. We know that the earnings season so far has been largely in line with what the market was expecting. We had not seen any sort of bad surprises, but on the other hand, we have also not seen any sort of good surprises as well. Now, technically, a lot of analysts at this point of time are of the view that this remains a buy on dip market. If you see any sort of correction towards the 18,000 mark or the 17,900 mark, that will possibly be a trigger for some of the short-term traders to go long on the market. So it remains a buy on dips market. This is at this point of time not a sell on rise market. So clearly the optimism level is still quite high. If you look at what it means in terms of the sustenance of the uptrend, how can Nifty do that? Well, the Nifty needs to now close above the 18,220 point mark going ahead. If it can achieve that feat, then probably you could see addition of lot more long position, and then we could make that move towards the 18,400, 500 mark where the record highs lie for the Nifty 50. So very crucial week next week as far as the technical setup is concerned. Also sectorally speaking, the sector that analysts are really looking out for next week is the Nifty Metal Pack. The Nifty Metal Index has given a breakout on very strong volumes in the past few days, both on the daily as well as the weekly chart. So that means that you could see some bit of long positions being added into the the metal stock futures next week. So that is one sector you guys should really watch out for. But overall, don't be too concerned or overtly concerned by the sort of lackluster trade that we have seen in the market the past 2-3 sessions. I think the market still remains a buy on dip market, and therefore it is looking quite good as far as the benchmark indices are concerned. That said, let's take a look at the 5 stocks that I felt were buzzing in trade today and kept up on my radar today. And the first one is from the chemical space. Now this is a stock we all know, one of the best chemical stocks out there over the past 5 to 6 years, SRF. The company came out with another quarter of strong performance as far as Q2 is concerned. If you look at one of the key things that really was the highlight for me was the fact that the chemical business is now accounting for almost 50% of the company's revenues as compared to about 39% a year ago. So clearly the stable earning, the sector or the segment for which the outlook is the most positive, the contribution from that segment is now inching up for SRF, and that is a big positive. Apart from that, if you look at the chemical business's performance in the second quarter, the operating profit doubled on a year-on-year basis, clearly suggesting that the growth momentum is in favor of SRF as far as the chemical business is concerned. And going ahead, therefore, the stock may continue to do well, largely on the back of the strong capex guidance that the company had given not so long ago. SRF's capex is expected to drive volume growth going ahead, especially in the chemical segment where bulk of the capex is going to happen. So this is one stock that is looking very, very strong as far as earnings momentum as well as stock price performance is concerned. The next stock, of course, this has been one of the best performing stocks in the Nifty pack throughout this year. It's the latest entrant in the Nifty pack as well, and I'm talking about Adani Enterprises. Now if you look at the September quarter earnings, they were spectacular, basically justifying the sort of strong performance that we have been seeing from the stock in the past 3 to 4 months. The company's Q2 net profit doubled on a year-on-year basis, operating profit more than doubled on a year-on-year basis, and sales were also very strong. Now, importantly, the new airport business, that contribution, the contribution from that business is improving very rapidly and very meaningfully for Adani Enterprises, and is contributing to the company's growth that we are seeing in the numbers. Apart from that, the surge in coal trading volumes that we saw in the September quarter, the likelihood is, the expectation is that that will also sustain in the coming quarters as well. So clearly, things are looking up as far as Adani Enterprises is concerned. The one stock where things are not looking so great is from the footwear space, and this is Relaxo Footwear. Now, this is one stock that I have been optimistic in the past as well, but if you look at the September quarter earnings, clearly a very weak performance from the company, and some sort of performance that tends to hurt stock price performance in in the future. If you look at the company's PAT, sales as well as operating profit, they all three failed to meet analyst estimates for Q2. The near-term margin pressure that the company is currently seeing is largely on account of the weak demand, especially in the mass market segment, and of course higher input costs that the company is struggling with. So clearly margins will remain under pressure, and therefore EPS, or earnings per share, will also remain under pressure in the coming quarters. Apart from that, Axis Securities has downgraded the stock to a hold rating, as it believes that given the weak earnings print that we have seen in the September quarter, that means that the current valuations of the company are not really attractive enough to make an entry into the stock, and therefore they want to wait for a better opportunity, probably a meaningful correction in the stock going ahead, and then probably turn optimistic as far as valuations are concerned. So Relaxo Footwear, things are not looking great, and this is one stock that is not likely to walk too much with investors going ahead. Next up is from the QSR space, and this is Sapphire Foods. The company came out with a very resilient performance given the concerns around inflationary headwinds that the company was facing. It has been a very resilient performance. Most of the earnings metrics were in line with what the market was expecting, except for the sharp decline we have seen in gross margins of the company, almost more than 300 basis points year-on-year decline in gross margins. But that was also expected given the fact that the company has not been able to pass through all of the increase in input costs that it had seen in the September quarter. But the expectation is that with raw material prices, a lot of soft commodity prices have fallen 15 to 20% on a sequential basis. Margins from here on should see improvement on a sequential basis in the third quarter as well as the fourth quarter for the company. ICICI Securities believes that there is scope for the valuation discount that at this point of time Sapphire Food gets compared to, say, its peer Devyani International or a Jubilant Foodwork. That should narrow going ahead and probably will drive stock performance. They believe that the market will soon realize the difference between a narrative stock and what the real reality is, or the real fundamental performance is in terms of what Sapphire Foods is delivering. So very interesting comments coming in from ICICI Securities, and they are clearly sticking their neck out on this stock, and we'll have to wait and see whether their buy call on the stock turns out well in the next 12 months. Lastly, surprisingly, from the metal pack, yes guys, JSW Steel is a stock that I want to talk about, and I want to talk about this because there are a lot of rumors now emerging out of China which are basically indicating that the Chinese economy finally, after 2 years of their zero COVID policy, is now looking to probably relax that policy on a gradual basis going ahead. We know that currently COVID cases have been spiking in certain parts of China, but it seems that the state governments there, the city governments there, and the national government, of course, is coming under increasing pressure to relax a lot of the regulations that the government has imposed. And that is generally positive for the Chinese economy because it will allow the pent-up demand to come through, it will allow productions to start, the entire economic engine to start, and also the stimulus that the government has been trying to provide, that also to take effect. Now, generally, China being the largest consumer of commodities, that will be good for a lot of steel producers across the world. With China coming back, the growth engine there purring, probably you could see a swing higher or a upswing in metals demand, and that could possibly drive global commodity prices and therefore benefit a company like JSW Steel, which is a high component of exports as far as steel is concerned. So this is one stock to look out for. As I said earlier, technical analysts have been indicating that metal stocks could see some long positions being added next week. So this will be a very interesting counter within the entire metal pack. That said, let's quickly take a check on the market and how we are doing at this point of time. It looks like we are going to have a muted close in the market. If you look at the Nifty and the Sensex, the chart can come up. Actually, we have seen some bit of gains since the time I started speaking. The Sensex now higher by about 0.2%. The Nifty up by 0.4%. If we could have the Nifty mid cap and the Nifty small cap charts as well, I think there also you have seen some bit of strength coming in. Actually Nifty mid cap has gone down. Nifty mid cap is down 0.2%, guys, so clearly underperforming. How's the Nifty small cap doing? Yeah, pretty strong, 0.4% higher. The Nifty bank was down as well. So surprisingly, the strength is not coming in the market from the banking names. Clearly, the Nifty bank index down about 0.1% at this point of time. That said, of course, next week is a truncated week. We will probably have a trading holiday on Tuesday. So given the truncated week, there is a lot of data points to watch out for next week. First up, of course, will be the US October non-farm payrolls data that will come out later tonight. Now, this has been one of the the data points that have been driving markets outlook expectation as far as the US Fed rate hikes are concerned. So this will be a data point that will move the market in the US definitely, and possibly our markets as well on Monday morning. So watch out for that data point, guys. Apart from that, in terms of earnings, we have two big Nifty earnings coming on Saturday, that is tomorrow. SBI, State Bank of India, as well as NTPC will be reporting their second quarter results tomorrow. So the market will be reacting to that also on Monday. Apart from that, there are not too many big data points, economic data points coming out next week. But of course, we will have the options expiry on Thursday. So watch out for a little bit of volatility as we near the expiry of the options on the Nifty. But overall, the setup looks quite good. As I said at the beginning of the show, the technical setup is looking quite good, and technical analysts are recommending a buy on dip strategy on this market at this point of time. Well, on that note, I'll say bye to you. Please keep on commenting and putting out your stock queries on the comment section below, and also keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, guys, stay tuned to moneycontrol.com and download the Money Control app. I'll catch you live again Monday morning at 9 a.m. Till then, goodbye.